You're entering the future-ready CNBC-TV18 EBIX Cash Studio.
Hello and welcome to this CNBC-TV18 special from the CNBC-TV18 EBIX Cash Studio. I'm Shereen Bhan. You're watching the GST Sentimeter. It's the first face-to-face meeting of the GST Council since the onset of the COVID pandemic, and Lucknow is the venue. The city, by the way, has been seeing a torrential downpour over the last few days, but that has not impacted the gathering of state finance ministers and representatives from across the country. Now, on the agenda, several items related to rate revisions, items ranging from medicines, food delivery apps, solar-powered devices, metals, and a lot more. The council has agreed to extend the concessions for some drugs used to treat COVID till the end of the year. A proposal by Sikkim to levy a 1% COVID cess was rejected. All states have unanimously decided not even to discuss the possibility of bringing petrol and diesel under the ambit of the GST. With us on the program, Najib Shah, the former chairman of the Central Board of Excise and Customs. Also with us, Prateek Jain, partner at PwC India, MS Money partner at Deloitte, and Rohan Shah, tax expert. Gentlemen, appreciate you joining us here on the program. Mr. Shah, let me start by asking you, Timsy was just reading out that long list of items up for consideration of the GST Council. The mind boggles that, so many years on, the council is still looking at rate revisions. Should this not be a matter that the Fitment Committee takes a call on, decides and signs off on? The bulk of the council's time goes into deciding whether pens should be at one rate or another.
I can't agree more. Obviously, there are huge considerations which every state has and concerns which every state has. I guess which is why it takes a lot of the time of the GST Council. Coconut oil, for instance, Kerala, I'm sure, would be extremely interested in the rate of coconut oil, whether it is a cosmetic or a cooking medium. That's how the Central Excise had this constant debate. So I wish they had taken the bigger ticket items. Petroleum products needs to have a discussion. Whether you bring it or not, it needs to have a discussion and a more detailed, considered discussion. You start off at least with ATF, which is what I was hoping for. I was hoping also that they will address other issues like the need for apex advanced ruling body. You can't have each state giving its own opinion on various matters. I was hoping that the tribunal will start functioning with members inside that. These are issues which the GST Council ought to have been debating, rather than getting the nitty-gritty of details of rates, where the Fitment Committee also has representatives from the major states.
Exactly. Yeah, and that was the point that I was trying to make as well. And you're right, a lot of those big ticket items that you spoke of have not been addressed. But on that issue of petroleum products, Mr. Shah, I was very clear that there was unlikely to be any move forward in this meeting on that issue. What is the incentive for the centre, in fact, to move forward with this? Look at the kind of mop-up on excise that the centre is sitting on. And obviously, there is no incentive for the states to do so either. So this is a non-starter. Now, specifically on natural gas and ATF, the hope was that we would have moved forward. But there hasn't been any proposal on that moved forward by the centre either.
Which Shah are you addressing? We have two Shahs on the program.
Najib Shah. I'll come to Rohan Shah in just a second, but Mr. Najib Shah, I forgot we have two Shahs on the program.
Okay. No, you see, I agree with you. There's very little incentive. But if you're talking of GST, you're talking of bringing all the products into the GST chain. If you're talking of reducing costs, if you're talking of credits not getting blocked anywhere, then it's a no-brainer that you have to bring in petroleum products. And remember, by bringing in petroleum products into GST, it's not as if the states and the centre are not going to get revenue. They will not have this exclusive use of this revenue, which they are enjoying right now. So it is that they will get revenue. It will cut down some costs, most certainly. It will ease the blocking of credit, which is now troubling the entire industry, because petroleum products, their impact is right across industry. So the earlier they consider, I don't even see any reason why we can't have a reasoned discussion, where the pros and cons are weighed instead of summarily dismissing it merely because of revenue considerations.
Yeah. Yes, and the hope was that at least that the discussion would have started, and that is what the Kerala High Court in its order had also suggested, that the petition filed with the Kerala High Court, that representation should be taken up by the GST Council, which was the recommendation of the GST Secretariat as well. But Rohan Shah, to the point that was being made there by Najib Shah, that the big ticket items haven't been addressed in any form or fashion. We're still tinkering with rates. At the end of this, have we moved the needle at all? And is this rate revision that we've actually seen being done today likely to result in anything material?
Sadly, not so. And I think, what we've now done is the GST Council meeting is almost like a federal budget. Every meeting, some taxes go up, some taxes go down, which certainly wasn't the purpose of getting such a high-powered council together. If the council is not taking substantial issues of policy, then quite honestly, I think they're doing a disservice to themselves and to the nation. So the fact that, you can meet and then you agree to disagree on many policy issues, and in addition, you agree to tinkering with various rates, probably, in terms of certain revenue concerns, certain things expectedly going up, a few going down, I think it defeats the very purpose. It's almost like, having a budget announced pretty much at every GST Council meeting. And I think for me, I'm also asking, do we just not have the traction at the GST Council that we had before in terms of taking major decisions and moving them forwards? And, somewhere you have to also wonder whether this whole compensation cess issue has really muddied the waters in terms of the credibility and, the belief that was there. Because you're seeing people polarized. You are seeing people quite strongly articulate in their dissensions before the meeting. And, if the GST Council is reduced to this, it's really bad news for us.
Yes, I would imagine that this is bad news if all we're doing is tweak rates. But let me get Prateek and Mani to comment on the rate changes specifically. Prateek, one of the key changes is carbonated fruit beverages or fruit drink and carbonated beverages with fruit juice will attract GST rate of 28% plus the cess of 12%. Now, how significant is this in terms of impact on the FMCG sector?
I think this is a significant change because there was a lot of ambiguity as to what kind of fruit drinks, and the percentage of fruit juice could differ. It could be 5%, it could be 10%, it could be 15%. In what situation, what rate would apply? There was separate rate for fruit juices and pulp at around 12%, then there was 18% with the residual rate, and then 28% for aerated water. Now I think the attempt is being made to harmonize and say that any carbonated drink, irrespective of the percentage of fruit juice, will attract 28 and 12% cess. Brings in some clarity, although what you'll have to see really is that whether they align the definition of carbonated beverages with fruit juice with what we have in FSSAI. Because in FSSAI, there is a certain percentage of fruit juice that they talk about, between 5 to 10% typically. Then it qualifies as this. Also, Shereen, globally, governments are encouraging drinks which has more and more fruit sort of content. And therefore, there are countries which has graded VAT or GST rate to say, as the content of fruit is more, the rate would be lower. Of course, India has not embarked on that journey as yet. I think there'll be a substantial impact on FMCG sector. There are a lot of drinks which are there in the market where the lower rate is being applied currently.
Okay, so you see that there will be an impact on FMCG companies on account of this. And it sort of negates what you were just talking about, which is the global direction that governments are taking, which is to incentivize the use of fruit versus carbonated drinks. But Mani, let me ask you about the other rate change, and that is the hike in the GST rate from 5% to 18% on iron, manganese, copper, nickel, cobalt, aluminum, lead, zinc, tin, chromium, ores and concentrates. Now, what will be the significance of this decision? You're on mute,
Okay.
Mani.
Yeah. So some of these changes are actually to correct the inverted duty which had crept into some of the user industries. So not all of them, but some of them clearly have got user industries which are taxed at a lower rate, and therefore it was necessary to increase them. Now, at a broad level, if you look at the items on which it has gone up, all the metal-related items, none of them are typically end-use items which consumers use. And therefore, there is a process of a value-added chain through which all of these flow through before the final product goes to the consumer. And therefore, to a very large extent, whether it is 5 or 18, I would say possibly in 80% cases, the buyer of it would be getting the input tax credit. To that extent, this decision would remain cost neutral. There would be a few industries where the eventual use of these metals results in the manufacture of an item which could be exempt subject to certain very specific conditions. There we would have to see an impact. But just one point here on the subject of the frequent changes, while we shouldn't certainly be having the kind of changes that we are seeing, and as Mr. Rohan Shah mentioned, we are actually seeing something like a union budget each time this happens. But let us also be mindful of the fact that if there is a certain sector or a certain industry which needs certain relief, which is being taxed at a rate which is causing a difficulty or distress in that particular industry, possibly we now have a forum which can provide that relief quicker. They don't need to necessarily wait till the union budget of the next year. And the relief after an evaluation by the Fitment Committee and after a discussion can be provided earlier also. So while it is not desirable that we keep tinkering with rates, in certain cases and depending on the specific situation, this is also providing an immediate relief to certain sectors, which possibly should not be waiting for too long.
Yeah, I get the point that you're making, that, in terms of course correction, if needed, the council should take up these issues, whether it's inverted duties or otherwise. As Timsy was pointing out, some of the other decisions taken, levying an 18% GST on paper sacks. Mr. Najib Shah, again, to the point that Pratik was making, one would hope that you would incentivize the use of paper sacks, for instance. Why would we actually see a hike in the rate there?
I won't be able to hazard a guess, except again, if they are thinking of correcting a structure which is otherwise inverted, I would not like to hazard a guess because I really have not seen the details of this particular rate increase.
Sure. Let me then address the crucial issue, which is the elephant in the room that was not taken up by the council, and which really is the inclusion of petroleum products under the GST ambit. Let's address the ATF issue. A senior government official that I was speaking with, said that, look, states have nothing to lose if they were to give up VAT on ATF. And apparently the total sort of national collection on account of VAT is minuscule in comparison to the size of the problem that we're talking about. What do you think, Mr. Shah? I mean, why do we drag our feet on something like ATF, for instance? Would it really make a difference to the centre and the state if this were to move under the GST?
I would think that by bringing in the ATF, they fear that it will be the beginning of bringing in all other petroleum products, because I really can't think of any other reason. ATF impacts only a few states, Maharashtra, the Union Territory of Delhi, the major airports where fueling and refueling takes place. So I would really believe that the fear is only that, because otherwise it is a major step forward, a signal that we are interested in discussing this issue, and we don't have to run into and rush into taking a decision, but at least a movement would have taken place, and it would have been a wonderful signal for the industry, and also prepare the states going forward to look at how we can expand the base of tax, ensure that there's no evasion, to make up for the possible loss which the inclusion of petroleum products will bring to the revenues. Like I mentioned, it's not as if they're going to lose all the revenue. They will still be getting revenue, but not as much as they're getting right now, obviously.
Yeah. Yeah, but that has come to pass. Pratik, I want to come to you now on, at this point in time, if you look at the rate revisions or some of the other changes when it comes to things like Aadhaar, etc., it doesn't seem like this is going to end in any significant, meaningful way. And the expectation was that this GST Council meeting, since it was the first since the start of the COVID pandemic, the first face-to-face meeting, etc., would have perhaps taken on some of the larger issues. But that has come to pass.
Yes, on the rate change, Shereen, I would have expected, and maybe in the next GST Council, a discussion on the rate rationalization at the overall level, right? So there is a discussion between 5, 12, 18, and 28. You merge it into a three-rate structure, which Finance Commission also said. Unfortunately, there's no discussion which happened on that. I'm not too disappointed with the rate changes, by the way. Two things which I like to highlight. One is COVID cess of 1% Sikkim. They've not accepted, which is good move, because after Kerala imposed a cess some time back, there was a fear that other states might also kind of bring in something similar, and then that defeats the purpose of one nation, one tax. That's one point. The second, on coconut oil, right? I mean, there was a discussion that, based on the size of the pack, etc., the rate could, differential rate could apply.
Yes.
And I think GST Council has said that look, this requires further study, and they've kept that on hold. And that brings me to the first point that you raised, that in spite of Fitment Committee, why does it need to go to GST Council? Because at some point in time, GST Council also looks at the social side of it, the impact on the end customer, and so on and so forth, beyond the pure play sort of economics of it, right? And I think that's important for the GST Council to look at. So I agree. I mean, these rate changes, most of it seem ad hoc at this point in time. And a larger discussion about the rate rationalization should happen, hopefully, in the next GST Council meeting.
But gentlemen, we will take a break and return to get your final comments after this very short break. Stay on with us. You're watching the GST Sentimeter. You're watching the GST Sentimeter, and we're in conversation with our experts on the decisions taken by the GST Council. Prateek, Mani, let me come back to you now. This was something that Timsy had alerted us about. This was a recommendation made by the Fitment Committee, which has now been approved by the GST Council. It has approved the proposal for e-commerce operators like Swiggy and Zomato to be made liable to pay GST on restaurant services supplied through them. The changes will come into effect from the 1st of January 2022 to allow these operators to make software changes. The Fitment Committee view was endorsed by the GST Council, which means expand the classification of restaurant services to include e-commerce food delivery apps. Amendment will be introduced to Section 9(5) of the CGST Act. Prateek, implications for the likes of Swiggy and Zomato?
So, Shereen, one will have to see. I think they were talking about two options. First option was, I think, what you're alluding to, that instead of restaurants, the food app will pay tax on behalf of the restaurants. That would mean that from a consumer standpoint, they'll still pay the same tax rate. However, the small restaurants which are currently not paying GST because they're below the threshold will also most likely come within the ambit, because the food app will be required to pay on everything. And that's how it works in other cases where similar regime applies. Also for the restaurants, what it would mean is that they will have to maintain, say, two separate books, right? One for normal sales to end customer, and one for sales through these apps. So it will lead to a bit of complications, and it will, of course, require a lot of changes at the level of food app, et cetera, et cetera. If they have gone for the second model,
yes,
where there are two transactions, one from the restaurant to the app, and then from the app to the end customer, then you'll get a credit for taxes paid by the restaurants. Now, for the end customer, again, the tax rate remains more or less same. But there, I think there is a confusion as to whether these food apps will get the credit of GST that they pay on advertisement expenses and things like that. Because mind you, they pay 18% tax on the commission or fees that they charge, right? So that credit should be allowed. I think that there's some confusion. So either of these models, I think the fine prints will need to be seen, and I'm sure that these apps will engage with the government over the next few weeks to sort this out.
Yes, and while we await the fine print, what I can add is that it will exclude services supplied by restaurants located in specific hotel accommodation. Specific hotel accommodation includes those having a declared tariff of 7,500 rupees per day and above. Mani, how do you read this?
Okay, look, first is there is no doubt on whether these are e-commerce operators or not. I think they are certainly e-commerce operators. And there's really speaking no difference to someone supplying food on an app compared to someone who is supplying electronic goods on an app. So there's no doubt on whether these are e-commerce or whether these are not e-commerce. They are e-commerce. Now, the challenge to my mind would be that the restaurant business is much more fragmented than the business of, let's say, durables or electronics or phones or even pharmaceuticals. It's a very, very fragmented business where today the e-commerce operators like a Swiggy or a Zomato would be picking up food from millions of outlets all over the country. Some would be in the organized sector. They can have 2 sets of books. They can keep 1 set in terms of what they sold with tax, what they sold in the restaurant. But many of them would really speaking not be able to afford the cost of doing that compliance. They would not be able to maintain books of accounts or any documentation which is required for GST purposes. So in a very, very fragmented situation where to a very large extent, what both these food e-commerce operators are doing today is to encourage widespread employment all across the country. And there's an enormous ecosystem that has developed around them. So at the stage when there is a huge ecosystem that has come into force, where large number of the restaurants, the people who supply the food, really speaking, or who make the food, are far below the GST threshold. Some of them won't even qualify under the erstwhile thresholds that we used to have much before GST came into force. Is it the intention that we need to make them come into the tax net? Are they big enough to do that? Are there a lot of cases where possibly the tax authorities feel there is some evasion that is going on? I'm not too clear on that. But clearly we need to wait for the fine print to see, is there an exemption provided to people who are below a certain threshold? Is that reasonable enough? How would it apply to very small joint from where the food is picked up? How would the e-commerce operators for food ensure that whatever they are doing today does not get impacted vis-a-vis the consumer? So the consumer doesn't end up paying more because there is a new tax. All of these things, I think we need to wait and watch.
Najib Shah, MS Money, Prateek Jain and Rohan Shah, thanks very much for joining us here on the GST Centimeter. We appreciate your time and we will, of course, keep checking in with you as we detail the fine print. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a minute with a lot more.